Let's just get into that call. What prompted the change of mind? And when we talk about the high flyers, is it anything beyond NVIDIA? What kind of names are we thinking about?
Good morning, Jonathan. So, look, I should say at the beginning is we are still overweight stocks. And our base case is still that equities will end the year higher than they are today. We have taken some chips off the table, and I think there are a couple simple reasons. First of which is you have a lot of good news discounted in. We expect a strong Q2 earnings season, including for many of those high flyers. But the main point is that crossbar has been raised and expectations have become very high. Even when you have a beat and you have strong guidance, you can still see some disappointment as some of these trades around, whether we're talking about semiconductors or some of the other areas that are very geared to the AI trade, have just run an incredible amount. So again, I think there'll be an opportunity getting these names as we get through the back half of the year, but we are at a point where it's going to be a little harder to beat and to impress the market than it was 6 or 9 months ago.
So, Russ, just to be super clear, this is an earnings call. It's not about the incoming data, what's happened at employment, what might happen with CPI later, how the Fed's going to respond to it. This, for you, is about earnings.
I think it's a sentiment call, the way I'd frame it, because I do think the earnings are going to be strong. We're confident a lot of these companies are going to continue to beat and guide higher. But again, the crossbar's gotten really, really tough to go over. And when you have companies and stocks that are up 30, 50, 70% in a short period of time, what they've got to demonstrate to investors becomes very hard to beat.